Adam Merlin, president of Merlin Auto Group. One piece of caution towards the last quarter of 2022, and I'm sure this has a lot to do with the economy in general, the stock market in general, rising interest rates. The actual conversion rate of listings to sales actually went down. So where they were selling 80% of the cars that were listed at auction, that dropped down dramatically towards the last quarter, which has negatively impacted values to some degree, but it's also what it's done is it's made people not hit the reserves on their cars. The cars ultimately didn't transact. And that's one of the most beautiful things about investable automobiles. We always say when the market spikes and it gets hot, what really happens is a new baseline value is set. If a Ferrari goes from 100,000 to 300,000 and then there's cooling in the market, all those cars don't flood the market. It's not like a massive sell-off like what happened to Carvana or what's happened to Tesla, where their stock goes from $900 a share to $100 a share because everybody's selling it. There's not enough Ferraris that were 100,000 that went to 300,000 that if 10% of all of the cars hit the market, it's not enough transactions to impact the overall value. The car may not sell for 300, maybe it goes for 250. There's not a ton of distressed sales, so there isn't enough volume to actually affect it. So the new baseline becomes 250, 300. And then you hold out, and then the next time there's another spike, it goes from 300 to 500. And that's how you can look and see how these values just continue to increase.